IBC brings the family together around money.
Letting our money sit locked away behind bars when we could be accessing that money now to do the things we want to do to make the memories that matter, because tomorrow is not promised to any of us.
I want to think long-term, save money, but at the same time, I also want to live now and make sure I get these experiences in case I don't.
Everyone wants to be the multimillionaire business owner. Nobody wants to be the business owner in the dark.
Hey everybody, what's up? We are doing a first here. We are live. We've the first time Brian and I have recorded together in person, and we've also got special guest here on, Josh Rose. We are in Scottsdale, Arizona for the Factum Financial Infinite Banking Mastery event. Kyle Fuller is a stud in the infinite banking world. He's about our age, and he has a huge practice, and he has poured into Brian and I. You know, we want to build a business, and we want to emulate what he's doing because he's doing everything right. And Josh is one of his agents that works with Factum, but he's got his own business. So it's really cool that we get to connect with people that think the same way we do. And so we'll let Josh give a little intro on himself, and then we want to talk through some of the things we learned today in the conference. This conference specifically was for clients of Factum to learn about infinite banking and how to level up just from getting a policy enforced. That's just step zero, essentially. It's not that we're practicing infinite banking the day we get a policy. There's a lot more to it beyond that. So we're going to have kind of a casual fireside chat. We did about 30 minutes of tech troubleshooting just to get to this point. So if the quality is not what you're used to, we're okay with that, because the fact that we're getting here to talk today in person with a beer, with a whiskey, and getting to chop it up after a great event is a really cool opportunity for us. So Brian, anything else before we introduce Josh?
No, just, great event, great to be here in person. Hans and I it's wild, we talk all the time, but we get to see each other like twice a year, so it's pretty cool to finally record one live, even with our tech issues, and might be a little suboptimal, but that's all right. Josh, man, awesome to see you. We've gotten to know you through some of these events, actually, I think, in the Infinite Banking Think Tank, and we just kind of hit it off on the same thing. We sat around and had a couple little drinks and a cigar. Was that a year ago? Got to chalking.
First time I met you, it was a couple years ago now for you.
Yeah.
I met you last year at this event.
At Kyle's event,
Yeah. No, it's an honor to be here. Great to get to know you guys. Obviously, a lot of commonalities between us and our stories and how we arrived at infinite banking and just our infinite banking journeys. And I always look forward to seeing you guys at our events.
Likewise, man. What is your journey? How did you get here?
If you're listening and not watching on YouTube, Josh is kind of a bodybuilder, fitness. I know you had a pretty extensive career in the fitness world before getting into this.
Yeah. So I ran a CrossFit and sports performance gym in Minnesota. I had my own COVID journey, which kind of is what we kind of hit it off, when we first met each other on our whole COVID journey that led us to IBC. But ran a gym, CrossFit sports performance, moved my wife and 2 kids at the time, now I got 4, out to Kansas City because she got fired during COVID, and we were just kind of on this journey, and I told my wife I'm going to take a year of just to kind of explore, because I ran a gym, I also invested in real estate at the same time, and so I took a year to kind of explore all the things I was interested. I did online fitness coaching. I got my real estate license because I like investing in real estate. And on that journey, I was doing the 75 Hard Challenge. If you ever done that, I highly recommend it for anybody. But I was just crushing books, and I'm not a reader. But that, COVID was a unique period of time. It shook a lot of things up in the world. For me, I just started reading everything I could possibly find, and that's what I came across becoming your own banker. And also the podcasts I was listening to were more family legacy type things, because I'm the oldest of 22 cousins. So I have this big burden for my life to provide for my family and be a leader for my family. And so those two things collided, and that kind of started my IBC journey. And I'll just say this little point, I was a huge Dave Ramsey disciple, so I hated whole life. Mm-hmm. And so the first thing I see, it's about whole life. Gosh dang it, I almost threw it away, but I'm just like, there was just enough thread of truth that I just kept pulling, and makes sense. And once you get connected to the community, the people that are living this thing out, it's like, oh my gosh, this is what I was looking for my family. I see the guys that have been doing it 20, 30 years. That's what I want. That's what I want for my 22 cousins and extended family. Like, that's the life and how I want to lead my family. And kind of like Kyle said today at the event, where traditional finances separates family and promotes individuality, which is predominant in America, IBC brings the family together and gives that patriarchal head and helps bring the family together around money, where most Americans are separated by their finances. So,
yeah, he said something that we've talked about on one of our prior podcast episodes. Was we did a whole talk on, it was like roots and wings, and families of modern day in our society create like two types of kids that have really strong roots and never launch, and kids that have like really strong wings. And we try to create these like hyper capable kids that can go out and solve problems in the world, but all they have is wings without the strong roots. And like what he talked about today, the exact same word we used was like, it's best if you can create a family where they have strong roots, they're connected to the family, and they have strong wings. They're ready to fly and do amazing things, but how can we be interdependent as a family? And infinite banking, when you look at that from like a family mastery standpoint, really brings that together. Like how it can bring the family together because of the interdependence it brings in this banking system, in helping, relying on each other, and building this generational thing. And you had mentioned to me actually a long time ago what attracted you to Factum Financial, and that was what he talks about in the areas of life. And so Hans and I often talk about the 5 F's. So it's really, they run completely parallel. Like we said, there's the 5 core areas. There's faith, family, finance, fitness, and friendship. Where friendship being community, not just like your buddies, and everything else there is pretty obvious. But Factum talks about something very similar that attracted you. So what is that, and why did that matter?
Yeah, that's exactly what led me to Factum. Because what I didn't say on that year-long journey when I was finding infinite banking, my wife and I were also dialing in the areas of life that are important to us. We're like, the world is chaotic right now. What is, we were also exploring a lot of different things, but what do we actually care about? It's our faith is important to us, our family, my fitness. I ran a gym, those are our top 3. But then I was like, you know what? I really do want to grow on my financial IQ, my financial stewardship, investing. I didn't know what that meant, but I want to grow in it, which was a taboo thing for me growing up. So I didn't know how. I was kind of scared to growing up, but I had a huge desire to do that. But then also the 5th F, I grew in Kansas City. It was future, but now I use friendship too. And we called it our Fab 5. Faith, family, finance, faith, family, fitness, finance, future, or now friendship. But all 5 of them are future oriented, right? And so what my wife and I were like, these are the 5 areas we care about. These are what we want to grow in. And kind of like what we talked about today, we created a paradigm of looking for opportunities and relationships that are in alignment with those 5 areas. So when I ran into Factum, I went through a bunch of different agencies as I was looking through, learning about IBC. And when Factum starts talking about their 5 areas, that was just like a sign from God for me. It's like, all right, these are my people. They're running after all the same things that I was. And I wasn't even trying to be an agent at that time, or like, I'm just running after these things in my life. And I see some guys running after the same things. I'm all right, I want to run with this crew.
Yeah, and like what they say is, which I think are just different ways of saying almost the same thing. Like their 5 areas are spiritual, personal, family, financial, and occupation. So they're so closely related to the 5 like that we look at as our core pillars, and the 5 yours are coincidentally the same. Yeah. Yep. But so it is cool that like they're looking at like a whole life area, like how can you best optimize and enhance these 5 areas, and that's what it means to be like true personal success. So pretty cool thing.
For the people that can't see visuals or whatever, but when we do this stuff live, we rank ourselves on the 5 areas in a scale of 1 to 10, and it's in the shape of a circle. So it doesn't matter where you're at, just honestly evaluate yourself in each of these areas. And then when you connect the dots, which we didn't do that today, but when you connect the dots, you can kind of see, oh, this is uneven. I'm a 4 spiritually, but I'm a 5, personally, or, and you can start to see, oh, if it's not a smooth wheel, that makes sense of why my life feels out of whack right now, because your life's not running smoothly. But most people don't have a paradigm to think about what success looks like. They're just focused on financial, or they're just focused on one area of life. But like what Kyle says, we focus on abundance, we should keep building a bigger circle.
Has there ever been a point in time that all of those, so imagine this, like for those people that are watching or listening, imagine a circle that is cut into pie charts of those 5 areas, whichever ones you want to use. And if you could score them from like the center of the circle, the outward radius to the end for each of those areas being 1 through 10, and you were to circle the strength in each area. So like, what's the strength of your spiritual or your faith? What's the strength of your financial side, 1 through 10? And you connected those. If they were all even, whether they were all a 1 and terrible, it would make a smooth circle. And then if you went out in that radius of the circle to the outer edge being 10, and you connected all the dots, you would have a smooth circle. So have you ever had an actual wheel that was smooth? Have all areas of your life ever been equally the same?
Mine usually aren't. I'm pretty critical with myself, but it's, Kyle mentioned today, and he said this in our team meetings recently, he does this exercise in his family banking meetings, and his 6-year-old son said, you know what, Dad, I think I'm an 8 in all these areas. My first instinct was, that's kind of, silly, but Kyle was like, that's awesome, man. It's great that you see yourself that way. And I thought that was a fascinating way for a father to encourage his son. And that was encouraging to me as a father. Not only that he's having those conversations, but that he's affirming his son's own view of himself because of the paradigm he gave his son. There's a lot of things to unpack just in those couple statements right there, but family values, a paradigm to think, which is what we were talking about a little bit before the call, but then seeing the genuine response from his own son and then affirming that. I mean, that's what infinite banking is all about to me. And what we talk about, the purpose of being successful financially, is to create abundance in all those other areas.
Yeah, and that's what sets apart Factum as an organization, what we try to do for Remnant Finance, and in general, the IBC approach, the Nelson Ash Institute approach to how we look at financial strategy is you can't have a conversation with an IBC practitioner, whether it's Nelson Ash Institute or talking to one of Kyle's guys at Factum. You can't have this conversation where children and legacy don't come up over and over and over. It's like if you counted the number of times that children and future generations came up as a topic today, you wouldn't think you were at a financial strategy mastermind or a conference. Like financial planning, you could never mention children except for one time, in a conventional setting. It's all about children and raising them to understand what we're doing and why. And the fact that an 8-year-old or the age of his son that said that can grasp, understand that we're trying to place ourselves in these metrics, that these metrics are important, and that we want to rank ourselves and improve ourselves on these metrics. Whatever the 8-year-old says, the fact that he's even thinking about this compared to his peers is off the charts. And one of the things I wrote down that Kyle said today was, my kids are only this age for 1 year, right? So you just had your 4th kid, and so you got a young, how's your oldest?
5.
So you got 5 through newborn.
Yep, 5, 4, 2, and 2 months.
So you're super busy. I've got 4 and 1. I feel like I'm busy with 2, but you're super, super busy between 5 and newborn, and you've got 14 through 6 with 4 kids. So each of us are in different stages here, but your kids are only this age once, and you never get that time back. And so it's so important to recognize the value in each of these years. And it's really cool when you start thinking this way financially, that you inherently incorporate your family and your children into this way of thinking, because what are we doing this for? We're doing this for them, and we're doing this for us to be able to live our lives and enjoy them. So I think that the overwhelming theme of children in a financial planning conference is so unique to this element of financial strategy?
Yeah. I was thinking about Shala's presentation today while you were talking, and it's ironic that at a financial conference, her whole presentation was about vacations and about family experience. So we want to be successful financially, to live abundantly in those 5 areas. For her, she predominantly focused on vacation and time with her family. When are you talking about those things at financial conference? It's so abnormal and countercultural. And one point she made, which is, you guys talk about all the time on your podcast, the traditional financial model, it's about separating yourself from the control of your money, and you're always living in the scarcity mindset, which I know you guys talk about all the time. And Shala brings this full circle, talking about vacation. It has nothing to do with investing, it has to do with the quality of your life. But she was saying, before infinite banking, I had all my money locked up in all these things, very successful on a balance sheet perspective, but I never felt like I could go take the family vacation because I was sacrificing my returns or sacrificing, the balance sheet success. And she just changed where she put her money first, which we all know in the IBC world. You're just changing one thing. You could theoretically do all the other things the same. You're just changing where you put your money first, and it has a drastic difference, not only financially, but on living abundantly in the area of life that you care about.
And living intentionally now. And it gives you a lot of capability to live intentionally right now. So when you have access to that cash and you can do those things, like she talked about taking these vacations that she always wanted to, and she even talked about how she went years, like they planned it and all kinds of things happened, and she was their family was doing things differently, and it was like 10 years before they finally decided, like, let's take this dream vacation we've always wanted to do with our family. Their kids were now 10 years older, but it was just like, because she started practicing IBC and now teaches it, like she can take that intentionality and everything she did right now. And so many of us, like in the accumulation model of financial planning that you're talking about, like we're constantly thinking about living and planning for retirement and letting our money sit locked away behind bars, when we could be accessing that money now to do the things we want to do, to make the memories that matter, because tomorrow is not promised to any of us. I don't have a lease on life, maybe you do. But I don't know when this ends, and it's just like, and we forget that, like, how important that is. And think about this, like the power of whole life insurance is, versus like a traditional financial planning model, is we're saving and accumulating this money in the traditional financial planning model to have later in life. And if we die today, there might not be enough for our family, and we didn't live intentionally today for our family. But when you insert this one thing, even if you stick to largely the parameters of the traditional financial model, but you also practice this with whole life insurance, it's like, I can live intentionally now, knowing that if my tomorrow is my last day, I'm also leaving my family whole. So you get the best of both worlds in that regard. And I think that's something that we don't talk about enough, is the opportunities that this gives us to do the things we want to do today.
And those vacations exist in the conventional financial planning conversation in retirement.
Yeah.
We talk about, we're going to take these cruises.
We're going to travel.
We want to have these experiences.
Yeah.
We want to live this life. We want all the fruits of our labor when we're 65. And so the fact that Shala was able to talk about, we were in that mindset of like, this can happen one day, and then all of a sudden we think differently, and this can happen next year, and we can do so and understand how to fund it. Without getting into any of the policy mechanics, we can recognize that with our children, they're only this age once. We don't get these years back, and so I want to, yes, diligently plan for a future, think long term, save money. But at the same time, I also want to live now and make sure I get these experiences in case I don't when I'm planning to in retirement. And there is a way to be able to do both efficiently without sacrificing one or the other. And that's as always, comes back to what we talk about in the conventional financial planning model, is that it's either one, you're focusing on the long term, sacrificing now, and we can blend these two together without losing any time value with our children, with our families today, and also have that amazing future down the road.
Mm-hmm. Yeah. No, we talked about it earlier, at the conference too, with one of you guys about, every older parent that I talk to is like, man, enjoy the diaper years, enjoy enjoy where you're at right now. And I've learned to let that sink in. And what does that actually mean? Like, slow down in the moment, live intentionally, which is what we all talk about, financially. Live intentionally, get out of the normal paradigm. But I've started to apply that to every area of my life, not just with kids, but what are people ahead of me saying? And that's, to tie it back to IBC, that's what I started seeing, the guys that, that's the vision I had in my head for my life, bringing my family together around money that leads to abundance in the other areas of life that I want to grow in. I see them doing that, even though I didn't fully understand it at first, because I don't know about you guys, a lot of clients are like, yeah, but I don't have access to my money for 2, 3, 4 years or whatever. They're talking about, they're seeing the short term, loss, if you want to call it that, but they're not seeing the long term gain. Right now I'm in the diaper phase. There's actually a positive way to view that. So how do you guys talk about your clients, or what do you, what conversation do you run into, or how do you overcome that? I don't have access to all my money right away type of conversation.
Well, right off the bat, we have two things. We're going to break all of our possible places we could put our money into two things: saving or investing. If you're saving your money, yes, you have access to it, but if you use it, it's gone. That's not really the purpose of saving, is just to use it and dispense of it. You're saving for a larger purpose. Investing, the intention is that I'm going to grow it, so nobody asks, in my 401k, what's my balance going to be? I'm 30 years old, what's my balance going to be when I'm 32? How much money will I have? Nobody asks that. They ask, what's my balance going to be when I'm 60, and start withdrawing from this. Every year you wait to deposit into an interest-bearing compounding account, you're cutting off the last year that you withdraw from it, which is the largest year on that growth chart. So if you don't, it's like, okay, yeah, you have what we would call a liquidity drag for 3 years, where you have less cash value accessible to leverage than you put into the policy. That's true. But what are you comparing it to? If you're comparing it to the stock market, you're also not touching that, because if you touch that, you're reducing your principal, and therefore you're just chopping off this compounding, and you're removing time on the back end when compounding actually works for you. If you're talking about a savings, it's like, yes, savings is liquid. You could put this in your savings account, but then when you deploy it, it's a one-time use of capital. So either way, if you're talking about investing, you still have the same constraint, where if you want this to be optimal, and if you want these beautiful growth charts that you're showing me here that you could get otherwise, here's where else I could put my money if I invested it, you also can't withdraw it. Because if you want that number, you can't touch it, because that requires continuous compounding uninterrupted. If you want savings, you can have a savings, you can have a checking account. And if you're at the point where you think a checking account is going to be more efficient than this, we're probably not going to work together as far as setting up an IBC policy. We need a lot more financial education, because that's not even Dave Ramsey level checkers. That's just money. You might just put your money in your mattress, So I think that argument of, in a couple years I can't access all of my money, it doesn't really hold water when you kind of drill down on compared to what.
Yeah, and I would say, that's just a short-term thinker. And what I usually tell people that are thinking like that, I was like, if you need 100% of your cash right now, this isn't for you. It's not the right time, or just not the right process for you. And that's what Nelson said too. Like, the first thing, like, you got to be able to think long-term. You got to think more than a few months ahead of you.
Yeah, and of course that gets back to not understanding a policy. Like, I purchased rental property using my cash value within 6 months of opening my policy.
Yeah.
It's not that you can't, it's just that you're not going to have 100% of the access. But
100%.
Again, you're not trying to do that. I think that at the end of the day, we should always be striving to bring the conversation back to death benefit, because cash value is a manifestation, a current net present value of that future death benefit. That death benefit is very valuable. That conversation loses some of its impact if you have a single guy with no family right now, nobody depending on his income. You kind of have to get them to understand that one day someone will, but right now it's not really a driving factor. But in general, we want to start with that death benefit conversation because there's no cash value without death benefit. I think so much, like 90% of the challenges we get wouldn't even come up if people had the same understanding of the product that we do. Even if you don't like the product, if you actually understand it and you decide it's not for you, most of the challenges fade away because they're not valid with a full understanding of how we position this asset and how we structure it. Most of them are based on the type of whole life that Dave Ramsey is going to compare against, which is not in the realm of what we do. And so I think those challenges fade away with an understanding, and that's our goal, is to get someone to understand why. I'm not just going to give you the answer as to why that question is not right. I want you to be able to answer that question.
Heck yeah. And when you understand it's a savings environment, then you start to compare it to, comparable assets. Oh, I should compare this to other liquid safe environments. What is that? Like a bank. What are the benefits I get? And you start having that 8 benefits conversation. Mm-hmm. Oh, I get way more benefits from just where I hold my capital. That starts to click, and then you start seeing the benefits. And my favorite analogy is, once you see that, then it's just like starting a business. Mm-hmm. Everyone wants to be the multimillionaire business owner. Nobody wants to be the business owner in the dark, working, 18-hour shifts and grinding. Nobody knows you're struggling, you're losing money. That's exactly what a whole life policy is. It takes a few years to capitalize. You're guaranteed a fixed expense. You're also guaranteed an increase in income or cash value growth every month, every year, as long as that contract exists. Who doesn't want to start a business like that?
Yeah. Yeah, just like you said, and he even mentioned this, like everybody sees somebody that's successful and they're like, oh, I wish I had that business.
You want the fruit.
Yeah, nobody sees the first 5 years of struggle and grind that it takes to build a successful business. Or, some of them blossom faster than others. And that can be true of whole life insurance policies as well. But depending on how they're structured, but like everybody has that season where like they were struggling, You see the contractor that started in a rusty old 1984 pickup truck, mm-hmm. just trying to find work, and then everybody wants their business when they have 30 trucks and all kinds of crews going out doing all kinds of work, and it took those first few years of struggle and just getting through it, and it's very similar to the business of if you look at your whole life policy as starting a new business. There's a couple years of grind, there's a couple years of hard work, there's a couple years of you're not perceiving to get everything out of it that you're putting in, and then all of a sudden the fruits of those labors, which is the fruits of that actuarial effect of the policy in that parallel, come into fruition. And it's like, after you get through that initial grind, these policies are absolutely phenomenal. I think they're phenomenal from the start, but people don't understand that from a cash value perspective, just like people don't understand how much sacrifice somebody had when they started a business.
Yeah, would you want to be, we asked somebody, hey, would you like to be compensated as the CEO of Amazon? Yeah, of course, like that's incredible. Okay, would you like to be the CEO of Amazon for the first 15 years when it's
20-hour days
when it's selling books? Yeah, you're selling books out of a garage, and people are saying like, why would anybody buy a book from a garage that you're mailing me when I can just go to Barnes & Noble, I can go to Borders Books? Would you want the first 15 years of Jeff Bezos' effort in Amazon, or do you want the last 15 years? And an insurance policy, typically the way we structure them, oftentimes within 4 years, you put $1 in, you get more than $1 cash value growth, right? Again, not about policy mechanics here, but if that's the case, insurance, inherently, I'm paying for more coverage tax-free than I'm putting in premium. That's the structure of insurance. So for the first 3 or 4 years, that's the case. I put in more or I'm getting more than I put in, but at a certain point you get quote break even. I've got more value in this policy now than I put into it. It's not just insurance at this point in the sense of multiplying the dollars in. It's also this a highly efficient savings vehicle. Like you're compounding the value you get beyond just the dollars in your cash value. If that makes sense. Kind of not sure that exactly tracks that analogy, but like yes, it's always insurance. It's suboptimal savings for a few years. Then it becomes a highly efficient high yield savings account, and then it almost it's not insurance. Or sorry, it's not an investment. We always say insurance is not an investment. But if I look at my policy in 30 years, my dividends that I'm earning are probably going to outperform every investment I have. Yeah. In that year, in year 30, calendar year 30, I would imagine that most investments will not perform as well as my dividend in my Lafayette policy in year 30. It's not an investment, but it has yield as if it were an investment. So it almost goes through these maturity stages in the life cycle of a business. And you're 3 years in, you're in your startup phase, you have mostly insurance and a pretty strong savings vehicle. But eventually that savings power surpasses what you could get anywhere else. And 4 years in, you're already there. I can't find the same savings rate in a high yield savings as I currently have 4 years into my Lafayette policy. So it's just, it's a different beast. And if that doesn't make sense to you, most of the challenges you might have don't hold water until you understand the mechanics of a policy.
Yeah.
Yeah, I want to shift gears a little bit because one of the things that I love most about what Factum does and that I'm putting together for myself, and then I would like to teach, the remnant as well, is this family banking mastery and holding like family banking meetings, and to really start to incorporate this into a system that becomes generational, becomes integral into who your family is. And like one of the things here is part of the vision is writing a future family letter, and I'm not going to give all the specifics, but like Kyle teaches. And have you done one yet? Have you written yours?
No, not specifically. I've dialed in, our 5 areas and how we want to grow as a family in our 5 areas. But speaking multi-generationally, I haven't written a future family yet.
Yeah, but it's cool. And so just like it talks here in one subsection of, I've got their little book they gave of your future family letter that you should include in your trust and all this stuff. But the letter helps your family, number 1, eliminate generational habits you don't want to carry forward. 2, set clear standards for what you do want to build. And 3, create excitement about what your family can become. Like, you're talking a lot about family, but what do you think in those regards? I mean, you haven't written yours either, which is actually awesome because now I'm going to make you brainstorm a little bit.
Yeah. What do I think as far as...
like those 3 things, like how can just getting involved in a team like Factum and infinite banking, what's that making you think about this sort of thing, like generational habits you don't want to carry forward? And never as a knock on the generations above, because I think that especially if you come from a good family, like they did the best they could with what they knew. Well, we know this new gold, we got this new gold nugget in all of our lives that we're the first generation to find. Mm-hmm. And actually what's cool, Josh brought his parents to this, so he discovered this and learned it, and he's incorporating it in an upline as well as a downline, which I think is super cool. That they were sitting there when I met your mom and she told me your name, I was like, "Oh, you're Josh's mom!" Like that was super cool, man. And so you're actually impacting upwards as well as downwards, which most of us don't get that opportunity in the same way. So,
yeah.
What do you think, man? You guys talk about this a lot.
Yeah, it's absolutely amazing. It's such an honor to have my parents here. The first, I've been at this 3 years now teaching infinite banking, and parents came to the first event. They're the only one of my family that's on board with infinite banking so far. So I'm still, doing that fight within my family, but oldest of 22 cousins. So obviously have a huge, just burning desire to lead my family in this. And the family banking conversation was like the first thing that really attracted to me, because I have this big vision for having, a family retreat location that's going to sleep 60 to 100 people, lake house, mountain house type vibes. And so the family banking conversation clicked right away from like, oh yeah, I don't know what that is, but that's what I want to do with my family. And I see how others that have been living this are bringing their families together. So that's my vision. And I was just talking to my wife about this the last couple of weeks. Like, we just need clarity between us and now my parents. We need to get clarity on the banking business that we're building, the purpose that we're building it for, and just stay focused on that. And the ripple effect will take over. People will see, and this is what Kyle talks about all the time. People will see you may have to go alone for a few years, and I've been doing that. When he said that today, he called me out in the group like, hey, you may have to run alone for a few years. I got a little emotional because that's the fight I've been doing. But anything worthwhile, anything worth pursuing, you might have to run alone for a while. But if you're focused on your values and you start the habits necessary that are aligned with your values, you're going to attract the right people necessary. And I believe that's how we got connected, and you're going to attract the right people necessary for the journey that you're on. And the Future Family Letter is just the roadmap that you're literally creating for your family. And it's all about the 5 areas, value alignment, and IBC is just the financial vehicle to set the strongest foundation for that.
Yeah. And I think it's cool, just shifts I've seen in my own life. Like, growing up, I remember asking my dad how much money he made. Like when I started to think about that sort of stuff, I was maybe 15. I don't know.
I remember when I asked my dad that.
And my dad goes, "That's none of your business."
He's like, "Don't ask me that question again."
Yeah.
I remember I was in my basement in White Bear Lake, Minnesota. I was like, "Oh shoot, I didn't know. I didn't. You don't know as a kid, right?" So I asked, an innocent question, and you got shut. I was like, "Oh shoot."
We don't talk about money.
I was like, "Oh, that was weird." You don't know what you don't know, right? I was like, "Oh, okay, that's weird."
Yeah. It's almost like the boomer generation. I think that was really generational. Like, we didn't talk about money. Yep. You didn't discuss that with your family, your kids, or your friends. Like, it was very secretive. And so you grow up under that paradigm, and it seems normal. But like now, like when we just bought a house, like I discussed with my kids, like how we were selling this house, how we're buying this house, what the costs were. They know roundabout what my income is, like how much I save. I've taught them that. So it's so cool and it's age appropriate. My older kids know more than my younger kids because it doesn't make a lot of sense to a 6-year-old. Yep. But like, we're starting to talk about those like money things, and like they're very well incorporated into like our financial status as a household. And that's because of this. That's because of infinite banking. Like, that's the impact beyond the money side of it. That's the impact beyond the mechanics of whole life insurance, is that you start to think in a generational way. And like, how can I think generationally if I'm not talking to my kids about it as they're trying to discover the world and learn these important things, these 5 things that, like we talked about, you can keep coming back to that, but one of those being finances. And it's like, if I'm not talking to my kids about that when they're 12, they're going to find out from the world. Yep. And what they learn from the world is probably the opposite of what I want them to learn.
100%.
Yeah. So it's like that family letter, man, when you think about that, eliminate generational habits. And there's like, everybody talks about this thing like generational trauma. Like, trauma is like the popular world in the world out there. And I think a lot of people, I take it as like half the people that say the word trauma are just pussies. Half of the people that say trauma have real trauma in their life. It's just like, oh my God, that was traumatic. And I dealt with trauma because like my boyfriend broke up with me when I was 17. It was just like, yeah, everybody's boyfriend broke up with them when they were 17. Stop it. Yeah. but you know what I mean? Like, it's like trauma is such an overused word. And I love that, like the phrase of this, like overcome generational habits. Like, we all have positive and negative habits generationally. And like, it's just infinite banking has made me focus on those things that I want to change to give my kids a higher starting point than I had.
Right.
And then hopefully they advance this system and this generational. When I say generational legacy, it almost always comes down to people thinking about the death benefit, but it's really about the lifestyle, and it's really about the habits. And like, can they start higher than I was? And they're going to grow. Hopefully they grow upon what I've learned, discovered, and changed about my life. And then they start here, they grow to here, and hopefully their next generation grows even further. That's the cool thing about what this does in your life.
Yeah. And that difference in the conversation that you're having generation to generation, I get, we trash the college model all the time. We trash the conventional financial planning model all the time. Well, I get why our parents told us to do that because it worked for them. Mm-hmm. I get when your parents go through the Great Depression, maybe World War I when they were younger, and certainly World War II. I get why, talking about finances, like we're just going to work hard and quietly provide, and I want you to have a better, I get why the boomer generation, based on how they were, collectively raised from what we understand of generational differences, I get why that's a taboo subject. But I prefer the idea of my daughter, like the example that he gave today, or I guess it was one of the guys who's, I think it was a client of Factum, but he was talking about, my daughter knows she has a policy and she likes to come into my office and say, he said it was like her special, money or something, like some like kid term for it, but like she'll come into the office and say, what is it at today? And he can log in and she knows this is a policy. And something somebody else said that I wrote down was, I think it was Kyle saying with him and his wife, like, we can't discuss money without saying the word policy constantly, because it integrates into everything you do. And so I have that resonate. I wrote that down because I always talk to my daughter. She's 4.5, but I always mention policies. You have a policy. We use our policies. I want her to associate policy with our family, with our money. And I think the opposite end of the spectrum of like, you can't ask me what I make, son. Don't ask me about finances. Mm-hmm. The opposite extreme is our children know exactly the status and the funding of our family bank at all times, or anytime they want to know. Yep. There's somewhere in the middle there that makes sense as they age. Right now, my daughter just needs to know that we use insurance as our money. Like, that is our tool. But as they get older, when my kids are Brian's age, or Brian's kids' age, like your kids can have a better insight onto the family policy system.
You'll be dead when they're my age. Remember, you always call me an old man.
Yeah, you are pretty old. We determined today, Brian's mid-40s. I'm not quite.
You're in your late 30s.
I'm not late 30s. I'm 37.
37.
I'm on the upper end of mid-30s.
No, that's late. 34, 35, 6 is mid. You might as well be
okay,
40.
I'm on the early end of late 30s. Yeah. But Brian's children will have a better grasp on what the family bank looks like. And I think that's a really cool thing. I can't wait until my daughter's able to understand. She can come in and say, hey, what does my policy look like? And even if she doesn't understand mechanics of infinite banking, I told her she's going to be in the family business. She's going to be in the insurance business. And my wife says, if you keep talking about it, you're going to ensure that she doesn't do it. You're going to push her away from it. But I'm convinced she's going to be very into this because I'm passionate about it. I hope she will be too. She probably won't be. But she will know she has a policy. She will know the value of it. She will know that when it's hers to inherit and take over as the owner of the policy, how to manage it. I just think that it's such a, more than anything we talk about with the power of a policy loan, guaranteed compound interest. Like, numbers are numbers. The numbers we have, they work. If you're skeptical, you need to dig deeper. But the numbers are the numbers. But what really matters is the fact that every conference, every conversation, we're trying to get to the point where our children don't have we don't talk about money conversation. They have I know the status of our family bank and I'm only 8 years old. That's so cool. I just love that about this community and this approach.
And I'm sorry, what were you going to say?
No, I was just saying, well, Kyle mentioned that today too, on just, I want it to be normal for my kids to, when they go to school, when they're out in the world, it's not, you don't have your own personal family banking system.
Yeah, you guys go to Chase Bank.
You go to Chase Bank, you go to Wells Fargo. Like,
what a loser. Yeah,
you don't have your own family banking system. I think that's such a profound paradigm that no one's thinking about. The Robert Kiyosaki model, you're an employee, self-employed, business owner, or investor. That's what most of the financial world's talking about. No one's talking about the banker, and the banker's making a spread on every single financial transaction. It's such a profound implication, and it's as simple as changing where you save first. and giving our children the language, the paradigm to make it whatever they want, because it's not about them being an infinite banker. It's about them using the family bank to do whatever they want to do in life, which is the 5 areas conversation.
Yeah, and what's cool is like, what you said, you want your daughter to get into this business, and she may not, but that just goes straight to what Nelson says in becoming your own banker. Everybody's in 2 businesses, the one they use to generate money, 100%. The one they use to earn income, and banking. And banking is the more important of the 2. So it doesn't really matter what she does for a living. She could follow and find that thing, whatever it is.
100%.
But if we've taught how this is powerful for the family, she'll be in both businesses. And that's what I want of all my kids. Like, it's not that important to me that one of them assumes our role with Remnant Finance or does what we do. Like, I didn't do what my dad did. I don't expect my kids to do what I do. Like, they're gonna go after their own desires and passions, but I want them to be in the family banking business, regardless of if this is what they do for a living. Like, that doesn't even matter,
Well, that's what I wrote down is Kyle said, I want my children to do whatever they want, plus be a banker. Being the banker, of course I'm speaking in absolutes here, but essentially being a banker is a non-negotiable. Like, we're going to raise you to be a banker, and then that allows you the freedom to do what you want. So if you think of the example that David Zapata, who's one of Kyle's business partners, phenomenal, brilliant mind in this space, he said, I'm from Columbia, the only jobs that pay are doctor, lawyer, engineer, so I became an engineer. Or you think of like the Asian tiger mom, you are going to be a doctor. Like, there's all these communities where it's like we force our children into these fields for a good reason. Like, we want them to be successful and we want them to stand out. The intentions there are good, but at the end of the day, it's like the reason that people don't force their children to be an artist, to be, a poet's not really I guess I have to broaden my mind to like what could encompass things. If you want to be a poet, I guess you'd be a poet. Like, let's say artist, that's acceptable. If you're a banker, if you understand and you have this policy that me and your mom set up for you and funded and now handed over the reins to you, and you have the knowledge and the wherewithal to use it and implement this concept, I can now feel very comfortable if you are an artist, because I don't have to worry about you, because you have we're just building a foundation, and we're allowing our children to remain on that foundation wherever they are and whatever they do. It's so powerful.
Yeah.
I feel like everything here comes back to our children, which is really, really cool and unique in the financial world.
Yeah, that's the whole interdependence conversation. It's anti what traditional finance is in, separate control. The bank sees our children as profit. Why don't we just change where we say we can start to control more the river of cash that's flowing through our life. I always say that the whole life policy is just a dam that starts collecting the river of cash. And now we have ownership, private contract. We're creating our own ecosystem to do whatever we want. We talk about Factum all the time. It's not about right or wrong. It's about the sequencing of your money. Change where you put it first, and you could do literally the exact same things you're doing now, but just by changing where you put it first enhances what you're already doing. But David Zapata always points this out all the time, but in the book, the title, Becoming Your Own Banker, he always talks about the word becoming. And we've talked about this in private conversations before, but back to the business owner conversation. You have to become somebody different to steward that big business that you build. Everyone wants the big business. No one wants the becoming process of starting that business. I think the banking business with Whole Life is the easiest business or the simplest business to start. Are you willing to become somebody different mentally, to think differently than the traditional financial model, and then to carry on what we talked about today, stage 1 to stage 2 is a paradigm shift, 2 to 3, 3 to 4, so 4 is the infinite banker, premium equals income, which goes over most Americans' heads, but you can't get there without starting at saving in a more efficient environment.
That's a great way to cap this, man. Way to bring it to a close.
Amen.
Hey, if anybody here resonates with you, how can they get in touch with you?
So the Family Banker on social media, on all social media, the Family Banker, Josh Rose on Facebook.
You put out a lot of content. I'm not a content guy. I'm not a social media guy. We have clips that get posted, but like I don't enjoy checking it. But when I do check it, I always see you on there. You have really good stuff. And one more thing that you got a shout out today. One quote. I know we just said we're wrapping this up, but this is something, because you're here, I literally wrote down about your runs. A quote from today was, the best predictor of what you do tomorrow is what you did today. And you have a cool streak going where we can say, I would put money on, I'd go to the sports book next door and bet money that you're going to go on a run tomorrow. Mm-hmm. And why can I bet that? Is because how many days have you gone on a run?
This morning was 1,068 unbroken.
And you said a minimum of 1 mile, but what would you guess your average is?
I usually, the most I usually run is 4 to 5, but 1 mile is my minimum standard. Yep.
And you've done that with the flu.
Yeah, and I just bruised my heel playing basketball the other day, and so I've been limping for about 5 days running a mile. Literally the first 2 days I was like pogo stick mile running.
And so, man, that's some discipline. Like, no matter how you're feeling, you're like, I'm going to get up and get out, and I'll come back in and go to bed if I have to. Mm-hmm. On the worst day out there, Yeah. He's posted videos on social media with icicles coming off of his beard. It's like, wow. It's like there's no rain, no snow, no sleet. He's like a postman. Like, he's going to get his run in. He's delivering the mail every day. Yeah. It's awesome.
Because you're a Minnesota guy. You're a Minnesota guy.
Yeah, I'm a Minnesota guy originally, and just to that point, that's part of the mentality for me behind that was, one, I moved to Kansas City. I didn't have a gym, so I needed to create some discipline. But then two, as I've been starting in this business, I've learned how to do fitness discipline, and as I changed careers, I needed to stick to a discipline I was good at. I knew discipline was the key forward. So as I'm learning new skills, thought process, and ideas, discipline is the way. So I stuck with an old discipline, and as I'm learning new disciplines, and that's the same way becoming your own banker is. Yeah. You're learning a new way of thinking, learning some new disciplines, but it's interchangeable in whatever area of life you're trying to grow in.
Patience and discipline.
I would imagine if you were our IBC client and I knew about your run streak, I would feel pretty confident that if you commit to this and paying premium, you continue to do it. So if you are particularly interested in fitness and infinite banking, Brian and I dabble, but clearly we're not at the peak of our game here. So if you
not even close,
fitness,
I'm 30 pounds above my peak.
Yeah, finance and fitness. This is your guy right here, Joshua Rose, on all social media. I would recommend following him just for the content. It's great stuff. And so yeah, thanks for joining us.
Appreciate
today.
you joining, man.
Yeah, dude. I always love seeing you guys, and thanks for having me on the pod.
Great for an in-person. Love it. All right. Cheers.
Thanks for listening to Remnant Finance. If you found any value at all in this episode, please subscribe, leave a review, and share it with a friend.
Remember, true financial freedom comes from taking control of your personal economy and breaking free from the status quo. So stop being a passenger in your family's financial future.
Boldly take back control of your wealth. Until next time,
this is Brian and Hans signing off.